Almost everyone knows Campbell's soup, the iconic red and white can, a symbol of comfort and a quick meal. For generations it's been a taste of home and a pantry staple. With such familiarity, many wonder, is Campbell's soup a good investment? The big question, could a single share, now around $44, ever be worth $1,000? To answer, we'll look at Campbell's strengths, weaknesses, and its place in the food industry. Investing isn't like buying a can of soup, it's a bet on the company's future. This video will break down Campbell's soup's story, its history, current health, and what it would take to reach that extraordinary goal. We'll keep it simple, focusing on the facts. By the end, you'll have a clear picture of what it would take for Campbell's soup to achieve something remarkable. So, let's peel back the label and see what's inside the can. We'll explore the ingredients that make Campbell strong, and those that could hold it back. We'll consider the long road ahead, all the way to 2050. This is about more than soup. It's about business, competition, and the future of food. Let's begin our journey. What does it take for a familiar company to reach an extraordinary milestone? Let's find out. The story starts now. Welcome to the world of Campbell's soup. Campbell's greatest strength is its powerful collection of brands. Household names like Campbell's soups, Goldfish crackers, Prego sauces, Pace salsas, and V8 juices. This brand loyalty means shoppers often choose Campbell's over cheaper alternatives. The company's steady business is another asset. People need to eat, no matter the economy. Campbell's is a defensive stock. Sales remain stable even in tough times. Its vast distribution network ensures products are always on shelves, making it tough for newcomers to compete. Decades of relationships with retailers give Campbell's a major advantage. The company's long history, founded in 1869, proves it can adapt and endure. It's survived wars, depressions, and changing food trends. This track record gives investors confidence. Campbell's resilience is its secret ingredient. Its brand, stability, and reach make it a reliable player in the food industry. In a world of change, Campbell's has proven it can last. That's a strength few can match, but even the strongest brands face challenges. Campbell's faces slow growth. Its core business is in the center of the store, where sales are flat. Shoppers now prefer fresh, healthy, and trendy foods, making canned soup seem old-fashioned. Competition is fierce, not just from giants, but from nimble startups and store brands offering similar products at lower prices. Campbell's must keep prices competitive, squeezing profits. Its reliance on soup is risky. Younger consumers want fresher, less processed options. The company is updating recipes and launching new products, but changing perceptions takes time. Rising costs for ingredients, labor, and transportation add pressure. Campbell's must choose, raise prices, and risk losing customers, or absorb costs and shrink profits. It's a constant balancing act. Managing expenses and staying relevant are ongoing challenges. The food industry is evolving fast. Campbell's must innovate or risk falling behind. The next chapter depends on how it adapts. Financially, Campbell's is stable, but not a high-growth story. It generates billions in sales and steady profits each year. This consistency funds operations and pays employees and rewards investors. However, Campbell's carries significant long-term debt from past acquisitions. Like a mortgage, this debt limits flexibility and uses up cash. The company's reliable dividend is a bright spot, appealing to income-focused investors. Even if the stock price doesn't soar, shareholders get paid. Overall, Campbell's is mature and dependable, not a fast-moving tech stock. Its profits are steady, but growth is slow. Debt needs careful management. The dividend is a key benefit. Campbell's financial story is one of stability, not explosive growth. To understand Campbell's, compare it to rivals like Kraft Heinz and General Mills. These giants also own iconic brands and face similar challenges: slow growth and shifting consumer tastes. Their stocks move in similar patterns, stable, with reliable dividends but rarely explosive. Investors compare debt, brand growth, and dividend safety across these companies. Campbell's stands out in soup and snacks but isn't as diversified as global players like Nestle. This focus is a double-edged sword: expertise in core areas, but more risk if those markets struggle. Larger competitors can offset weak spots with other divisions. Campbell's is a solid but not dominant player. It must constantly innovate to keep pace. The battle for shelf space and consumer attention is relentless. Campbell's is reliable but lacks a unique edge to dramatically outperform peers. Success depends on smart brand management and innovation. In this crowded industry, standing still isn't an option. Campbell's Soup went public in 1954, giving investors a chance to own a piece of the company. Early decades saw strong growth as convenience foods boomed. The stock price rose steadily, with reliable dividends rewarding shareholders. But the ride hasn't always been smooth. Ups and downs followed economic cycles and company performance. In recent decades, the stock has been mostly flat, with few dramatic highs. Stock splits in the past signaled periods of growth, making shares more accessible. Long-term investors who reinvested dividends have done well, but those who bought in the 2000s have seen little price appreciation. Campbell's has shifted from a growth story to a stable, income-producing stock. This history sets the stage for its future possibilities. Looking ahead, Campbell's leadership knows change is essential. Their plans strengthen core brands and grow the snacks division, especially Goldfish. They're making products healthier, more convenient, and relevant to modern consumers. Technology will play a bigger role: AI for food trends, e-commerce, and direct-to-consumer sales. Sustainability is critical: less waste, better sourcing, and eco-friendly practices. By 2050, Campbell's could help feed a larger, more demanding world. Success may mean expanding into new categories: plant-based proteins or personalized nutrition. Innovation and bold moves will decide if Campbell's leads or lags. If it adapts, profits and stock price could grow. If not, it risks fading into the background. The future depends on transformation. Could Campbell's stock ever reach $1,000 per share? At $44 today, that's a 22-fold increase. For a mature company, it's a massive leap, requiring a total transformation. The company's value would need to rival giants like Coca-Cola or McDonald's. Only a revolutionary product or technology could drive such growth. Realistically, Campbell's is likely to remain a stable, dividend-paying stock. The $1,000 target is more fantasy than forecast. The real value lies in its stability and income, not explosive gains. For most investors, Campbell's is a steady choice, not a moonshot.